Hey, good evening everyone. This is Chart Sniper, doing a weekend review video as usual, and this is for the upcoming week, which is from 13th December to 17th December. Uh, Now that we have the futures open and running, let's do a quick overview of the futures and how they are doing and any potential targets for the upcoming week. So let's get started with ES, which is S&P futures. And as we are looking at it, the last Friday close was pretty good. Uh, it kind of stayed above the 20 days average, and it is looking constructive now with 5 and 8 aligning above 20 average, and we have now perfect stack moving averages. And as long as it stays above these two, the stock market or the ES or the S&P 500 can continue moving higher. And to keep it simple, that's what it would be. So we are looking at a daily resistance of 477.4, the upper Bollinger Band, whereas the weekly upper Bollinger Band is at around 4758. So those are the couple of things that will be the resistance based on what we know, and all and of course the all-time high 4740 is also a resistance there. So with those resistances coming into picture, is there a way for us to kind of identify whether we would be able to make a new all-time high, or whether we are whether bounce is happening, whether that has strength or not? So a couple of indicators that might help with the perspective, and today I will be kind of using a indicator that a lot of people know, which is a RSI, relative strength indicator. And what we are looking at is there are three points. So one is this point, which is if you can see this RSI here, that's the kind of, it was at around 75, and wait, when it came back to that point or even slightly above that, the RSI was around 70, which means as the market made a new high, RSI made a new low, and then as the price is coming back to those highs now, the RSI is even lower. Okay, so for sure, we would like to see this RSI break above 58 and start moving towards that 70 as the price explore those new all-time highs. So as long as that is happening, everything is constructive. But if you see that, this kind of divergence intensifying, whereas market is moving higher, but relative strength is kind of staying low, that can be considered as a potential divergence or weakness that is brewing underneath the market. Okay, last time we had such kind of divergence was here. It's a positive bullish divergence where price made a new low, but actually RSI made a relatively higher thing. So this shows the bullishness. That's why it's the green color. Uptrend here, it's a downtrend. So we have to be still a little bit cautious. And whatever positions that we are entering in the market or individual stocks, try to kind of consistently book profits gradually, staged profit booking, and also staged entry, rather than trying to chase it when it goes to the extreme levels. Whenever it tries to pull back to 5 or 8, load at those times than when it's stretching beyond. Okay, so those will be some general guidelines overall. So S&P ES looks good, and it's trying to kind of above average bullishness on Friday. So we really have to see, until unless we see a big red candle like this here, nothing changes, and it continues to do the slow grind higher, um, and weekly also is supporting the same. Let's quickly change it to Nasdaq and see how it is relatively doing when compared to ES. Similar kind of profile, looks like, all clear for a slow grind higher, and as of now everything looks good. That 5 and 8 are crossing over, positive crossing over or golden crossing with 20, so which might, if it continues, it might cause a very decent upside move on Monday, or even like, to catch up with the S&P. Okay, S&P is a little bit higher here than QQQ. I think so that catch up will be happening in tech stocks probably this week. And yeah, again, similar kind of behavior here. The relative strength is making new lower lows, and we would like to see it trying to kind of go above that to see consistent gains. And we have some upside targets, which is daily upper Bollinger Band and weekly upper Bollinger Band or upside targets for now. So until unless it climbs above a all-time high, makes a new all-time high and stays above that for a couple of days, nothing can be sure. But if it manages to do that and stay above that level, which means we are looking a very nice rally into the year end, into the new year, and probably it can explore that 70,000, 17,000, and 17,500 ish area also going into future, into the new year. Okay. So large cap stocks, the tech stocks probably will have an advantage going into the year end. Especially it is comprised of lot of low risk, high cap stocks. Let's quickly look at Russell, and it was one of the underperforming stocks. So Russell RTY index as such has been weaker, and it is weaker now below all the averages, all the possible averages. But so far, it's a good start, 0.5% up, and if it can claim that, it can quickly make that big up move higher. And I have been telling in the daily recaps that this becomes very critical for the Russell to kind of participate in the upside, overall upside move for the entire market. To start moving higher. This is made up of all small caps and regional banks, so we would like to see this also participate in the upward move for continued new market highs for the overall market. So it's become critical, and we have to see how it behaves when it comes to the 200 days average and the 50 days average and 100 days average, 20 days average. So all these kind of resistances that are there, we would like to see some good and decent participation there. So I'll be watching it for some catch-up trades. And when we go and look at Dow Jones, it has been strong. Actually, a little bit more stronger than S&P to start with in the initial bounce that happened. But now it looks very good, very similar to the other charts that we saw, which is Nasdaq and ES. And we are looking at some potential upside moves possible there too. Slow grind higher. Um, so volume is not that decent as such on this bounce, like a decreasing volume and stuff compared to S&P, which was decent, flat or even higher volume and stuff. So we'll be looking at to see how this evolves. But with infrastructure spending and bills coming, all this kind of construction things happening, I think it will be very constructive for overall this index, any industrial stocks for that matter. So quickly, let's look at VIX, how it is doing. As I mentioned earlier, we would like to see VIX go below 20 for sure, and that's what happened. And it's good to see that it's below 20s and getting back into that 18 to 16 range. Let me get this here. So now it is in the medium range, and it 16 to 17, when it comes there, it will be in the fair range. What it means is it lets market to do its usual thing. What is market's usual thing? Continue slow grind higher. So this is a very nice gesture, and which might confirm that there is a slow grind higher possible for the market. And let's quickly look at SKEW. So we are looking at a SKEW value of 147, which is a little bit elevated. We have to see an updated value for tomorrow as it opens, and if it kind of comes down below 145, that's another constructive signal that uh, not much volatility is being expected into the year end stuff. So I'll be watching it to move below 145 towards that 135 level. In addition to that, let's quickly look at Bitcoin and Ethereum. Looks like over the weekend, a lot of volatility as such. I saw it moving quite a bit, right? We are looking at that down move below 200 days average, and it went all the way to 47,322. But today it looks like it bounced back above it, regain that 200 days average, and possibly trying to regain that 5 days average also. So, is it really bullish? Probably not on the daily chart, but the 200 days average is the say here. If it continues staying above that, then I think it can bounce back all the way to the 20 period average and then make a decision there. But overall, some decent selling happening there, some decent distribution happening there. And when we go and look at it, as we discussed earlier, we discussed that there can be a handle formation and it's still forming a handle. There is a cloud, weekly cloud sitting there acting as support. And last week, the 50-week average acted as support. And this week, we have to see if it can hold. And as long as it can hold like here the 50 period week average for a couple of times and then the bounce starts, then whoever is trying to take it lower, they're trying their level best, and price is hesitating to move below 50 weeks for a couple of weeks. What it says is there are buyers constantly, and whenever they realize that bears start giving up, and they will start pressurizing for it to go down, and then bulls can easily bring it back quickly. Okay, so but again, overall in the long term, that big curve on handle formation is what's happening. Looks like so far, whatever this range is, it moved 50% of that range down and is staying above the 50%. So we have to say if it would like to move a little bit lower to 38.2, um, or stay above 50. So we'll be looking that, into the cloud. So if you see this cloud future, how the way it is looking, probably a dip to that guy around 4130, 4200-ish might be good buy for a future move into the next year. But again, this is very volatile, and a lot of new applications are coming in this market, actual applications rather than just changing it as a means of money transfer. So I think all that will have very constructive uh, upside move into next year. Ethereum, last time I got some R when it touched this cloud and kind of glided through it, and it gave me a nice up move from around 2850 all the way to 4850. So I was easily able to ride the two. And similar thing is happening here. It's trying to kind of stay around that cloud. And let's see what happens here. As long as this range is not broken and is staying above that, I think that should be okay. This is more constructive than Bitcoin, and that cup already formed, the handle formed, it is moved higher and kind of staying a little bit higher than Bitcoin levels. So let's see. I think everything looks good. Everything looks okay. Just a sideways consolidation is happening, and I'm seeing a little bit squeeze happening also on the daily. So whatever direction it decides to go, it might squeeze a little bit more, and that's it. It will make a decision to move higher to 5400, or kind of go and find some support at the cloud top or cloud bottom around 3800-ish. Okay. So with that, we looked at the all the major indices that I typically cover, and with this context, when the market overall market is going higher and it's above 5 days average, 5 weeks average, you can go and pick the respective stocks in the of very good relative strength in the overall market and try to play to upside in those stocks. Okay, so yeah, that was a very quick overview. Hope that was helpful. I'm looking to see slow grind higher than some big moves happening to the downside. So that is the theme. Cautiously bullish and slow grind higher is theme. Okay. With that, let me conclude this. Thank you very much for joining.